Hey everybody, and welcome back to another video lesson. It's Cody with One Purpose Trading. Today we're jumping into our fourth video on our 10 video segment series on YouTube. We've covered so far stock market avenues, brokerage accounts, and trading styles. I went back and forth with myself. Do I want to show the complex side of the stock market this early on in the course? And the answer is yes. I wanted to dive right into it. This video is only going to be covering a very quick and to the point difference between stock shares, stock options, and futures contracts. Very quick, just to give people the idea that there's multiple ways to trade a very similar product on the stock market. So first we're going to be looking at SPY. SPY is an S&P 500 ETF, so you can see right here, S&P 500 ETF. The current price is $546, almost $547. We are near the all-time high as of today's date, 6/28/2024. My prediction is we are going to head into election year and become a very volatile market. A lot of people that are brand new to trading are going to get the harsh reality that this game is very difficult. So looking at S&P 500 SPY contracts, you can see over here I have active trader up. Essentially, I'm not going to go too much in depth on the software that I'm using. This is called Thinkorswim. In my previous videos, I called it TD Ameritrade's Thinkorswim. It is now Charles Schwab. They acquired TD Ameritrade. Thinkorswim is still the end-all be-all for me as far as charting. At a later video, I'll go through some chart examples and some indicators that you guys can throw on your screen to give you that edge in the stock market. But for today, the differences between shares, options, and futures as far as pricing. Say I only had $1,000 in my brokerage account, I could buy one share because I would use up $546. If it goes up $1 that day, I make $1. If it drops $1, I lose $1. Repeat that over and over again. If it goes up $10, you made $10 that day. If it drops $10, you lose $10. Very simple. I'm not going to go very in depth on the differences in this video, but just knowing you can buy a share on the S&P 500. Now, if I wanted to jump into options trading, instead of being on active trader, I would go to all products, and you're going to see here, this is called an option chain. I'm not going to go in depth on option contracts. I have a whole segment in my mentorship on just options because they're very complex as far as purchasing and selling and what goes into it. For example, you can see at the top here, we have delta, volume, implied volatility, open interest, vega, theta, gamma. Essentially what this is at the top is what all goes into the pricing of contract, what the dollar amount return is going to be based off of a movement to either the upside or the downside, depending if you are in calls or puts. Again, I do not want to overwhelm you guys on this early video lesson. Essentially what we're looking at here is the pricing of an option contract. So if I thought SPY was going to continue going higher, I could, instead of buying one share for $546, I could buy an option contract, and if it goes up $1 that day, I could essentially make $100. This is without any external variables, so time decay, which is theta, and anything else factoring into the contract price. So expiration date, that's when it's either going to be exercised or expire worthless. Premium of the contract, implied volatility, there's a lot of variables, but I wanted to at least show you guys this on a visual aspect of it. This is a very high level overview. What I want you guys to take from this video is the difference between stock shares, stock options, and futures contracts as far as pricing. So a quick recap. If I wanted to buy one share of SPY, it would cost me $547 roughly. If I wanted to buy an option contract, I could pick different expiration dates and pay that specific amount. And if it goes up, I make a dollar amount per move on that instrument. Lastly, if we're looking at futures contracts, I'm going to go to Futures Trader here. We're looking at MES. Instead of trading SPY, you would trade a futures contract called MES or ES. How this works, you're going to see a tick value amount. So 0.25 equals $1.25. So every point is going to be $5, meaning if I think that the S&P 500 or MES is going to go higher, I could buy, and every time this moves 0.25, I am making $1.25 in my direction. If it goes against me, every tick is what it's called, I am going to lose $1.25. Like 4 quarters in a dollar, there is 4 ticks in a point. Every point that it moves my direction or against me is going to be a $5 move. If I'm looking at something like ES, if I pull this up, every 0.25 move is going to be $12.50, or every point is going to be $50. So again, I don't want to overwhelm you guys on this video as we continue to progress in the stock market in this course. I will go over things more than once, so it will make more sense. But a lot of people, when they think of the stock market, they only think of shares instead of the other opportunities out there. So I'm going to slowly start breaking down these barriers and make it make more sense for you guys. But again, I don't expect you to understand the difference between options, stocks, and futures after this one video. We're going to continue pushing through this course. We have about 6 more videos that I'm finalizing here and I'm going to slowly release. I hope you guys have a wonderful day, and I'll see you guys in the next one.